Okay, for this trend trade example, we're going to look at a bullish scenario. And what I want to bring your attention to is, first of all, look at how these stochastics are moving up. So you see moving up momentum from the lower band. And as I run it forward just a couple of trading sessions here, watch what happens. Within 2 sessions, we're at the upper band and we're outside of the upper band. This is important because, see, now we're out of the upper band, and look how much room your stochastics have. There's so much strength coming into this move. And so you recognize that this trade is starting to go higher. By the way, this is Alaska Airlines. So ticker symbol ALK. That's what I'm looking at here. And so when you see that, where do you set your entry? You set it just above it, just around almost $46 a share. That'll be your buy signal here. It's about $46 a share, just kind of going with it here. And again, we're going to use our parabolic stop. Now, this is a trend trade, so we're going to be in this for a few weeks probably. That's typically the way you're going to watch this play out. And let's see what happens the next day. There's your shooting star. Now, you could start to tighten your stops if you're really worried. Take a day's worth of profits. But, this is a trend trade. This thing can cycle back down to your middle line, and it can do something like this. So we'll keep tracking it here just a little bit. And watch what happens. We got a bearish engulfing pattern the next day. And then it starts to soar. And this is the way a lot of trend trades will happen. You'll get a surge of energy right outside the band. It wasn't really a squeeze. You see, that wasn't a tight squeeze like what we had even back in September. But you were still having kind of similar to the squeeze. You got that push, that surge of energy up into the upper band as the strength is building and some other indicators and some other fundamentals and whatnot. And then as the trade starts to move, look at that. I mean, we're just pushing right outside the band, starting kind of that walking the band. Now, once you start walking the band, you're going to ride this thing for quite a while until it starts to pull away. Now, this is the first signs of pulling away. And you see your parabolic, you got money in the trade, but not much here. I would just go ahead and split that, put your stop up here maybe around $50. Once it starts the first part of pulling away, you could take your profit. Realize if we got into this thing at 46, which is where we said we entered, and you're already up here to 51, you got quite a bit of profit in that trade, especially if you're doing an option trade. But the trade's not done. Watch this. It keeps going here. Another little doji, a little bit higher. Now your parabolic is really starting to accelerate. There's where that acceleration factor comes in, as it feels like this move is starting to slow down too. And watch how this trend trade develops. It just moves right inside the band. Now, there is a really good reason to get out of the trade. It's a bearish engulfing pattern at $53. That would be a good excuse to get out of this trade. It's not mandated, but it's a good excuse. But watch what's happening. This is what I want to bring your attention to. This has shifted now, okay? When we were over here just, 4 or 5 trading sessions ago, percent B was starting to look a little weaker, but look at it now. Percent B is heading downhill while the stock's been going uphill. Now we got the exit candlestick. Are you starting to see the pattern here? Every one of these exit signals pretty much has a candlestick formation, and we're way overbought in our stochastics. You can put a stop in here now right around $53 and just be done with this trade. And just be done with this trade. If you did that, then that was probably a good move as the trade starts to move sideways here. One little surge higher, but the weakness is definitely coming in. You can see that strong bearish divergence now. Your stochastic still pushing it overbought. Yes, we're a little bit higher. We made another couple dollars in there. But the weakness is coming in, and this thing's going to reverse on you very quickly here. There it is. It's got to be happening pretty soon. There it is. So what you saw right here is you just saw the parabolic shift, which means we just hit the parabolic. So if you waited till the parabolic, you would have gotten out about 54.88. If you got out at the first sign of trouble, you would have locked in about $53. Now, which one's better? Well, a lot of people would wait for the trailing stop to catch up and stop out. I don't like that because you end up always selling on a downtick. Sometimes in a scenario like this, you get an extra dollar. or $1.88, and it works out well. But more often than not, what happens is if you trade to your first exit signal, or in the case of where you've got a target that's clearly defined, you trade to your first target and you get out, over time you will have more consistent profits than the trailing stops. So I like the parabolic system, which is kind of a variation on a trailing stop. I like it a lot for setting your stops. I try not to stop out. That's the truth. The truth is I'd rather get to a target and get out of the trade. So either way you exited this, it was a very profitable trade. If you did the first way, where we got in at 46 and you got out up here about 53, then you had about $7 per share. If you did the second way, where we got in at 46, and if you waited till you stopped out, you got out about 54.88. And so, that gave you a couple extra dollars there. You had about $8 worth of profit and some change. So there's another little trend trade for you.